Hey everyone, today I'm going to show you an easy indicator that is great for beginners that draws out supply and demand zones on your trading chart. I'm going to break down the whole strategy to use this to the best of its ability, and also you can use different strategies as well if you want to. This indicator is just a guide to see where the supply and demand zones are on the chart. Make sure you subscribe to the channel for even more trading content, and let's get into the video. So this indicator is called Supply and Demand MTF by Flux Charts. Now this is really simple, and my whole reasoning for creating this video in the first place is just to sort of simplify trading for those who have never really even got into it before. But if you have got into it before as well, then this might help you just to find those perfect entries, especially for prop firms, because you'll know exactly when the market's about to turn a certain way, because all you're doing is looking for the price to hit these green zones and to hit these red zones. So if you're looking for a buy trade, wait for the price to turn all the way down to this zone. And once it's around this zone and starts turning around the opposite direction, then you know you'll be able to catch a trade from this point onwards up until the red line, especially in the times of market opening time. So this was a London market opening time, and as I'm recording this right now, this is around New York opening. And it would have been the same for this trade right here if you're waiting for a short. So this is on the 1 minute time zone. I'll quickly go through how to trade it on the 1 minute time zone, but then we'll go on to the different time frames to give you an even better idea. Now the 1 minute time frame works well, but I've been finding better results on the 15 minute and the 5 minute as well. And I'll go through some of my previous results in a minute. But look here, when the price goes up to this range, if it can't beat that price, then it's going to come back down, because this is just showing you where the area of supply and demand is. Simplifying it this way just makes it seem a lot more easier for those who don't even know how to read charts yet. Say for example right here, where the price has gone all the way down and then broke through this area of supply and demand zone and carried on going down, even though back down here it was meant to go up. This is why you give it a couple of minutes, you wait for the market to actually turn around. If it breaks through that zone, then that's just a trade that I wouldn't be taking. If it just carries on going down, then I'd leave it and just keep on watching to see what it does. In this aspect, it did just hit some more area of supply and demand down here and then carried on turning all the way back up. When it came back up to this red zone, we're obviously going to be looking for another short. And when it did it, this area right here, it was trying to break this area of price right here at 3288 and just couldn't do it. So after a couple of minutes, it was exhausted. And you can see right here that it's literally touched the exact line of the supply and demand indicator. Keep in mind as well, if you're new to trading, there will be moments where there's going to be liquidity sweeps where it looks like the price is going back up. For this example, if you're in a short trade, it looks like the price is going back up, but all it did was took some people out of stop losses who gotten around this range right here and then carried on coming back down. And you can see that it did the exact same pattern once again. Went from 3288 all the way down to 3280. Literally hit the zone just with the wick and then carried on turning back around this way. Now you can see that there's a new supply and demand zone at this section right here. So the price might come up to this region and then bounce back off it and carry on going down. But if it goes through it, then you know that it's a definite buy. What it really works best for is finding these precise entries, especially if you're trying to pass a prop firm challenge, because with prop firm challenges you don't get a large amount of drawdown. If you go into drawdown too much, then you'll basically fail your account that you've paid your hard-earned money for, and this is what we don't want. So this is a trade that I did on Thursday. You see here on this 15-minute chart, there's strong buy zones at this region right here and then at this region down below. So I knew that if the price does go to this level again, it was around this sort of stage, if a price does go to this level again, then it will carry on going upwards. And that's what it did. You can see that it just carried on going all the way up exactly to this 350 region. And this is what I used as a precise entry. So I waited for the market to hit that 350 range, and on the 1 minute time frame, it literally hits that zone for less than a minute and then starts to come back down. And for this, all I was thinking was, yeah, it could go down even further, but this was when New York opening happens, and when the market's open, there's a higher amount of liquidity that go into it. If there's news or anything else like that, then the market can swing in different directions really quickly. So all I was doing is I got in for a short trade right here and just thought, right, well, it's probably best to take my money out around this 337 region. If it doesn't manage to hit that, then I'll just take my profit. And that was a nice 3-to-1 trade. For this one, for example, at this 320 region, this happened all in the night time, so I didn't manage to see this. But when the Asian zone, I didn't manage to see this one. This was on Friday when the Asian zone opened. So this was obviously in like midnight for me, 1:30, something along those lines. And there was a lovely sell zone that happened around here. The price tried to break through this sell zone but couldn't at all, and there was no other area of support on the 15-minute, so the price just carried on going down. So that was a strong short, and the market just carried on going down. So you would have been able to ride that through until the market closed. But yeah, it works best on a 1 minute chart, especially when you're finding your entries.